Hi everyone, it's Fiona from Nadaya Financial and it's Mortgage Monday. Today I thought I might discuss off-the-plan purchases. There seems to be a lot of talk at the moment on off-the-plan purchases and how people have put their deposits down and come time for settlement, the value of the property has come down. Unfortunately, this is one of the risks that goes with an off-the-plan purchase. So I'm just going to tell you a few things to consider when you would like to buy like this. When you're purchasing a property off the plan, you're basically buying a property from a drawing, from a sketch, from a plan, and it's not complete, and it may not be complete for the next 1.5 to even 2 years. So there are things that you need to take into consideration when you wish to purchase like this. First of all, if you want to buy a property in this way, you put an expression of interest in. So when properties go on the market for off-the-plan purchases, they accept lots of expressions of interest, and this does not mean that the property has been set aside for you. It's not the case at all. The only way that it will come off the market is once they receive the deposit for the property that you'd like to buy. Now, a few things that you need to consider with off-the-plan purchases. First of all, they've given you the price of how much it costs. Now it's your turn to go and research the area, the suburb, on the property to see if it's worth what they say it is. Are there other equivalent houses in the area or properties in the area that are similar to the ones that you're purchasing and around that price? That's important to know. Second of all, when you're buying a property off the plan, as I said, it's not a 6-week thing. It's not immediate. It can take 1 to 2 years for it to happen. So if you're going for a purchase with the banks and you go for a formal approval, it only lasts 3 months. So you need to find out if it's going to settle in December. Okay, maybe I'll go and get my finance sorted around October, November, so it's ready throughout the settlement and it hasn't lapsed, because that's important. You also need to make sure if you're selling your property that you'll have the funds available for settlement for the off-the-plan purchase. And lastly, when you're paying the deposit for your off-the-plan purchase, find out where it's going to. Is it going to a trust fund or is it going to the developer themselves? Sometimes when you leave your deposit with the developer, they offer a higher rate of interest, which can be handy if they keep your deposit for 1 to 2 years, because that's extra money that can help you towards settlement at the end. Be aware though, if the money is with the developer and the developer goes bust, guess what happens to your money? It's gone, baby, out of there. So just something that you need to know. So there are there's a lot of things to consider, but there are 3 things to consider. Make sure you've got the money ready for settlement when it does eventually happen, whether it means getting the finance from the bank or selling your property. Second of all, where the deposit is going. And third of all, research the market, research the area where the property is going to be. But one thing I want you to walk away with today is knowing that when you decide to do an off-the-plan purchase, that you have actually taken legal advice. Take the contracts down to a legal office and get them to review the documents to make sure everything's in order and it's going to happen the way that you expect it to happen. If you'd like any further information on what I've discussed today, feel free to leave a message in the comments box. Have a great week.